All right. Well, hi, everybody. Excited for today. We've got Mark Dixon from WesPay Advisors. This is our second video in our series. The first one we did about a month ago with Justin Davis. I'd encourage you to go check that out if you're interested in the topic of fraud at all. But I'm excited we've got Mark here today and excited to get into a new topic on payments. So Mark, awesome to have you here. Figure we could start with just kind of your background and what you're up to at WesPay and go from there.
Sure, absolutely. Thanks for having me, Colby. So I am Mark Dixon, and I have worked in the financial services industry for over 15 years. I started out as a teller, customer service rep, working for different financial institutions in New England. I've worked my way up in different capacities in financial institutions. So I've been a teller, customer service rep. I was a teller supervisor for a while. I managed a small call center for a savings bank. And then I actually, at that savings bank, moved into electronic services, which started my career really in payments. When I was working for that savings institution, I had all of electronic banking. So we called it electronic services. I had online banking for the consumer platform and the business platform. I had all of card services. It was a debit card shop. I had ACH origination, which is actually how I got my AAP. And I also implemented the wire transfer system. And I actually had all of the systems associated with that too. So it was kind of a hybrid position between electronic services, more operational side of things, and also the IT and technical side of things. After working there for a few years, I moved on to a position in IT operations for a bank holding company. And there I was working on our core and ancillary systems, and I actually had the hardware, the physical IBM i-Series for our institution as well. And I had check image processing, which is how I ended up getting my NCP, my National Check Professional Accreditation. I decided to move from that role back into a more payments-related role. So I had a brief stint at a credit union managing a payments team, and that's actually where I got my accredited payments risk professional accreditation. As you can see, very payments-focused. But I left there to go to a payment association, and at payment associations, they're considered trade associations and work as nonprofits on the outside of the industry, working to support financial institutions through payments, offering different services like audits, risk assessments, and also general education pieces. And when I was at that payment association, I was focused on innovations and payment strategy. And recently, I made a life change. I ended up moving to Colorado. And I'm now working for WesPay and WesPay Advisors. So WesPay is the trade association side of our organization. It's the payment association. And we do a lot of the same things as the payment association that I worked for on the East Coast. But we do education, risk assessments, that type of thing. But my primary role is senior payments consultant advisor for WesPay Advisors. And in that capacity, I actually work with financial institutions on implementing different services, on process improvement, strategy, different regulatory type of constraints. We work together to make sure they're positioned in the best way to handle those payment-related channels as they move forward.
Yeah, that's an awesome background. It's interesting that you've come sort of all the way from the branch into the role that you're in right now. I have to imagine that, you've got a story or two from, your past that has helped you in your role now, or is just just kind of an interesting story to share. When we asked Justin, he had an interesting one. This is sort of the thing that we do on this is try to ask a sort of a fun or interesting question about, your past experience. And Justin had a fun story about fraud with Ashley Madison. So you don't have to talk that, but just curious if you've got a fun or interesting story from your past that you want to share.
Well, I actually have one that's probably similar to that one. So when I first started out as it was an in-store sales associate, that was my role, and it was a teller and customer service kind of hybrid role. And one of my first disputes that I ever did was a card-related dispute. I actually called the merchant to find out, who they were and why they were charging our customers. And I remember they actually told me, they were like, they said to me, do you know what kind of a service this is? And I'm like, I don't really care. And they're like, this is for pornographic services. And I'm like, I don't really care. I'm just trying to help our customer because, he's telling me that these charges are not authorized. And it was pretty funny because they were trying to shame, me into feeling, like, oh, this customer's horrible. But ultimately, I really was just trying to figure it out for him and, get it squared away. But yeah, it's kind of interesting, the weird things that you come across when you're working in customer service.
Yeah, totally. So what are the things that you're up to now at WesPay? I imagine you're working with other credit unions. Like, do you work directly with credit unions or with vendors like Project Finance? How's that set up?
So we work with a variety of different participants related to payments, but most of our clients actually do end up being credit unions, small to larger size ones. We also work with banks, and we've actually worked with some fintechs as well as different technology providers. But the credit unions tend to be one of the ones that we work with the most because a lot of them are positioning themselves for treasury management related services, which is actually one of our best-selling consulting type of engagements. And if they're launching those type of ACH corporate origination programs, corporate RDC, all those services that help them attract and retain business relationships as they move forward with their strategies to grow their institution. So we do work with a lot of credit unions on those types of engagements, and it's really neat to see them that they're evolving through that process because it's newer to them. So it's not something that they have the business acumen for. So they rely on us to help them get to where they need to be as far as preparing to launch and then post-launch.
Got it. Are you seeing more credit unions move into the business banking space now than before? Like, I sort of wonder if you have kind of a leading indicator here as far as more credit unions getting into that space.
They do seem to be getting more into that space, and they approach it typically from a different stance from traditional banks. They're usually more limited on what they can do as far as business services anyway. So they're not supporting necessarily those large, national corporations, but they're really trying to find ways to support their local communities, onboarding those smaller businesses or smaller to medium-sized businesses that are really the bread and butter of communities, that are really supporting the development, offering those local jobs, local services, and they're trying to find ways that they can help support those members because they're a critical part of the communities that they serve in.
Yeah, right in line with sort of the ethos of credit unions. That's interesting. We haven't, as you're aware, we haven't really built a business banking solution, but it's something that we're getting pulled in that direction, from a few different people. So just kind of curious what you were seeing out there. Well, the first topic I wanted to kind of bring up with you is the whole FedNow real-time payments piece. Wondering if you can just sort of explain what that is. Like I'm a 10-year-old. How is it different than, what exists today? Why is it better?
Sure, absolutely. So it's really the whole movement that the United States has been going through really for the last 8 years to modernize and speed up the payment infrastructure. So one of the things that really first started was the whole ACH, same day ACH model, where we moved from having ACH transactions take 2 to 3 days to settle, and now they can all settle within that 1 day period. You could actually send an entry out today and have it come back if there's an issue with it, which is a lot faster than it was before. But there was a challenge that the Federal Reserve recognized a few years back, that the payment system in this country hadn't really modernized yet. So countries like Europe had already moved towards a faster payments model, and Asia obviously is very ahead of us in that regard as well. But in this country, we, similar to the card movement for EMV, we hadn't really modernized payments in that regard. So there was a whole movement to have the U.S. Reach a point where we were a 24/7 payment system, and that's something that we're working towards. But real-time payments actually help facilitate the accomplishment of that. And what it is that it's that the whole transaction piece happens. So a lot of times when we think of services like Cash App and Venmo, we think of real-time payment experiences, And from a user standpoint, that's true. I feel like, you and I go out to lunch, Colby, and you need me to pay you back for my portion of the meal, and I use Venmo to send you that money. That experience to you feels like a real-time transaction, but all the back-end pieces of that still go through a bank, and they either run through a card rail or they go through an ACH rail, and it could take, a day, or it could take a couple of days for that transaction to actually settle. So what real-time payments, with the Clearinghouse RTP solution, which is already live, and what the FedNow solution, which is being developed, look to accomplish is the full picture of that transaction happening in real time. So our piece of it, that user experience, takes place in real time, and we feel like we've settled our transaction. And then from the FI standpoint, the back end piece of that transaction will actually happen simultaneously within just a few seconds. So the settlement between the two institutions is complete as well. So the entire picture of the transaction is done.
And so today I know that a lot of ACH payments are running through the Fed through sort of a batch process. Is FedNow, will that replace this batch process with sort of APIs in order to do this in real time? Or what's sort of the infrastructure that's going to support the FedNow initiative?
So it's interesting you say replace, because in our country in particular, none of the payment rails ever seem to get replaced. When ACH was launched back in the 70s, people thought checks were going to go away, and they have not. So the idea is that really what the real-time payment infrastructure is a brand new payment rail. And it may take some of the use cases associated with those other payment channels like ACH and migrate them. But there's still a lot of use cases that are really valid for channels like ACH or even checks. So what it does is it just creates that new infrastructure in place. And there's really going to be two networks. So you'll have the Clearinghouse RTP network, which operates on its own. And then you have the FedNow system, which is just like another, it's like another ACH or FedWire piece of it. It's another module in their ecosystem that allows the transactions to facilitate. And then everybody else connects into it. So you have all the technology providers, companies like Jack Henry, Fiserv, FIS, that are really tied heavily into the financial industry. And what happens is everybody connects in through them, and then that's where those access points happen. One of the interesting things, and I'm sure we'll talk about it a little later, is the interoperability considerations between the Clearinghouse RTP and the FedNow solutions. ACH and checks operate very similarly right now. So you have the Clearinghouse will pass check files over to the Fed, and the Fed passes ACH files over to the Clearinghouse, depending on what your relationship is with either the Fed or the Clearinghouse. But nobody's really fully committed on the real-time payment front to saying that that's how it's going to work in that environment as well. So there's a lot of development that has to happen there. But ultimately, what it is it's just the ecosystem or the infrastructure that allows the transactions to take place.
Got it. And so you mentioned the Clearinghouse RTP that's already up and in business.
So back in 2017, they actually launched their network and started to onboard some of the larger financial institutions. And they've been in the process of, they're well over 100 now financial institutions that are onboarded. But a lot of them had previous relationships with the Clearinghouse. So it was an easy decision for them to onboard into the Clearinghouse RTP solution. But they're already actually facilitating the movement of sending and receiving funds real time today. But they have to be within that Clearinghouse ecosystem. So if I'm a Federal Reserve Bank, where all my connections are through the Fed, I can't receive those Clearinghouse RTP transactions or send them because my connection point isn't there yet.
Okay, got it. So is it typically like mid-sized institutions maybe that are using the Clearinghouse RTP?
So the Clearinghouse serves any financial institution, but it's known for serving mid-sized to larger institutions. It was actually created years ago by larger financial institutions, so that's the history of where it came from. It's considered more. It's not a centralized like the Fed solution. It's a little bit more of a private sector solution.
Okay. So do you see when FedNow is live, FedNow essentially replacing? I said replace again, but really cannibalizing the clearinghouse RTP business because more people are going to want to go with sort of the federal system, or can they both coexist?
I think they're going to need to coexist. So just like with checks and ACH, I can be an Echo member, for instance, which is part of the clearinghouse. So I can be an Echo member, and that's how I receive and process my checks. So those files go back and forth through the clearinghouse, but they actually will pass files and receive files from the Federal Reserve System. And ACH works the same way. ACH files will actually get passed to the clearinghouse, and the clearinghouse will present them to the financial institutions connected to them. So I really feel like the real-time payment ecosystem really needs to have both players in place. We're actually one of the only systems in the world where there's more than one real-time operator, so it's unusual to have the two anyway. But in order for it to really be successful, if I put a lot of resources into developing an RTP implementation, I've gone through a huge project plan. I've, say, worked with Jack Henry and Associates, and I've gotten all my connection points as far as online banking into my core system. So everything is set up through the clearinghouse. I don't want to have to reinvent the wheel and recreate all of that by now implementing FedNow. And I don't want to just toss everything with the clearinghouse because I have that existing relationship, and obviously there's contractual obligations and considerations there as well. So in order for these really to play well together, there has to be a way to send those messages across to each other and, have the passing of the funds occur through both networks to each other.
Yeah, awesome explanation. I appreciate it. So that would be the sort of centralized infrastructure to validate transfers and payments, and we'll get into the decentralized crypto world and talk a little bit about that, but not yet. Mark, again, could you just give us sort of a basic overview of what is remittance?
Sure. So the remittance piece of it is kind of when you're talking about the combination of the data associated with a payment and the transfer of the money itself. So for instance, wire transfers are probably a good example of remittance transfers. There's data that goes along with the payment, instructions that are specific to it, especially when you're talking like a foreign wire transfer. So there's all of these prescribed set of instructions that go along with the payment in order to help it get routed to its end destination. So the remittance piece of it helps it get to where it needs to be.
Yeah. Are you seeing more remittance in the wire space, P2P space? What sort of channels are you seeing used for remittance payments?
So wires are probably the one that everybody thinks of when they think of remittance transfers. They think of that whole the wire instructions associated with the payment, those end beneficiary pieces of it. But remittance applies to all payments. ACH network has addenda records that are associated with payments. The clearinghouse and FedNow solutions are both adopting the ISO 20022 standard, which allows for almost endless amounts of data elements associated with the payment, all helping it to get to its end destination, but also telling the story along the lines of the payment of where it needs to go. So it's really a hot topic of all payments today. Even the P2P scenario, say I'm sending funds out, because I have a child in college, they have an emergency, their card got lost or stolen, and they need access to funds. If I'm sending a P2P transaction to get it to them, there's still that piece of it that as to why I'm sending the money to them. So there's the story behind that payment as well.
Are there any barriers such as fees to accessing this type of data?
I do have an example here where some FIs will charge businesses to automatically populate ACH addenda records for them so that they can get access to it. They will offer alternatives to that, but it's usually a paper option or it's manual where they're like emailing or mailing them out an actual paper that gives them the information.
Yeah.
So it makes the data a little less valuable to them because it's harder to get it to them.
All right, so we've talked about FedNow. We've talked about remittance. Our third topic for today is digital assets. So CBDC, central bank digital currency, obviously will play a role in making payments faster. Obviously, there'll be metadata, like we just talked about, remittance associated with that. How do you see CBDCs sort of related to the FedNow work, and is that just yet another payment channel that we'll be adding? How are you guys thinking about that, Mark?
So CBDC is kind of interesting because we're really in the earliest phases when it comes to that. So last fall, the Fed, in conjunction with a bunch of other countries, released a research paper on the potential benefits and usage of CBDC. And it's one of those things where they're evaluating whether or not it's even a viable option for the US. And there's different methods to accomplishing a CBDC, but one of the ones that we all think of, and one of the ones I think that's probably the most viable, is that blockchain-based a backbone for CBDC. An interesting thing with that is that, so, a blockchain with, all of these different nodes spread across a network that has that controlled, verified source of truth type of thing going on. When you look at things like Bitcoin and Ethereum and all the other ones that are out there, they're not as stabilized as far as the industry goes. And that's kind of one of the reasons that financial institutions get a little nervous about them. I've actually seen institutions preclude those services from their members as well, or their customers. They'll actually say it's excluded activity. And it's because they don't have as much transparency into the transaction. It operates outside of all of these constraints that we have existing today. And they can't see into that transaction to know exactly who it's going to, who the parties are involved, why it's happening, all of that. But the blockchain itself has a lot of power in being able to transfer both data and payments. So it's a really ideal solution for creating, a whole host of reduction in the pain points that drive down payments, that bog them down. It's a great option for cross-border payments as well. Yeah. But one of the things from a CBDC standpoint is that the government is looking for a way to stabilize it from a currency standpoint. So, I think we've all seen how, things like Bitcoin fluctuate in transaction volume, so and dollar value. So you'll see these Bitcoins going way up in value and then way down, and it fluctuates all the time. But a CBDC would actually be backed by a U.S. currency, so it would be stabilized by whatever inflation was happening. And to your point, Colby, it most likely would just become another payment channel within our ecosystem. It also helps us drive a movement away from physical currency to digital currency, so that's another use case for it. But likely we would still see physical currency. We would have a digital currency. We'd have real-time payments. We'd have ACH wires and cards. But it's definitely an interesting movement. In most countries, if you look to see where they're at, there's only a couple of countries that are actually in like a pilot phase with their own central bank digital currencies. And I think Asia or China is one of the ones that actually has it. Everybody else is kind of like, well, we'll see what's happening with it. We'll evaluate it and determine if we even want to go down that course. So that paper by the U.S., the conjunct with the other countries, is an interesting movement in that direction. It definitely makes everybody think that something's going to happen with it.
Yeah, it's an exciting space. I follow the crypto world pretty closely, and sort of the whole notion of kind of programmable money and a government being able to sort of associate different rules of money that they can distribute is fascinating. I know coming out of COVID, we were trying to boost the economy and move inflation higher, and this whole concept of dollars expiring if you don't use them fast enough it just gets into a whole new world.
Well, one of the other interesting use cases for CBDC would be the idea of taking the physical aspect out, especially in a post-COVID environment. Everybody's still concerned by contactless type of transactions, and CBDC could accomplish that as well.
Yeah. Do you know if any banks are preparing for CBDC at all?
So in my experience, everybody is evaluating it. Again, they were all very nervous by, the Bitcoin movement, so to speak. So they were all like really nervous about the lack of transparency into those transactions. Some of them were interested, but most of them were like, well, we don't even want to go down this road at all because we don't know how we're going to get regulated. If it's the FIs, if the financial industry takes ownership of this, how are we going to be able to figure out where these transactions are going, the traceable pieces? What if it goes out of the country and we have no idea? Then it goes into an OFAC non-sanctioned country. Yeah. So there's all these concerns around it as to whether or not they'll be able to actually know what they need to know about the transaction itself. I think with CBDC though, everybody's kind of tuning into it at this point. I haven't really heard of any financial institutions that said, oh, we're going to have a CBDC or a digital currency strategy at this point. But I think from like a senior leadership standpoint, they're trying to tune in and say, what can we learn about it? And as that's actually something at WesPay and WesPay Advisors that we're trying to provide them with as well. So from a WesPay, from the Payment Association side, we're trying to give them the education they need to know about these types of emerging payment channels. And then from the consulting arm on the WesPay Advisor side, we can actually help with strategies related to these services.
Yeah, it's just sort of interesting to think about bigger picture. If you have a central bank digital currency, do you have a central bank digital wallet, and can the central bank essentially do an end run on our existing institutions, because the central bank can just deposit money, withdraw money right from your central bank digital wallet. So I sort of wonder, and the genesis of my question was, do banks see it that way? Are they working actively with the Fed to prepare for that world? And I imagine they want to remain relevant. Not that the central bank would ever completely replace the banking industry, but if you just sort of do a thought exercise and kind of carry it through, it's interesting that the power that the Fed will have being able to go direct to consumer if they go that route. If not, then you're gonna see banks and credit unions have to support a digital wallet to accept and hold that currency. And to the extent that we do get into any of the programmatic, programmable money pieces, is that wallet going to have to support those features as well? So it's fascinating space, fascinating time. I figured we could get into, kind of our next topic of just general innovation in payments. I've been following a lot of what's happening with Circle, Boston-based company that developed USDC. They're growing, incredibly rapidly. What are some other just kind of trends in payments that you're seeing, in the crypto side, the stablecoin side, P2P, anything that you're just seeing that is interesting to you guys?
So one of the things that I'm seeing is financial institutions seem to be moving in that direction of the technology evaluation piece, and I have a few thoughts on it. But from like an artificial intelligence standpoint, that's a space that they seem to be delving into a little bit more deeper. Although, again, I think the industry as a whole is a little bit nervous about it. But technology partners are even looking at that as well, from like a sandboxing standpoint. But they're looking at it from efficiency standpoint. We've had all of these institutions have had operational infrastructures in place for years, customer experiences that were really dictated by the limitations that they had. But then you have that whole movement from like the fintech standpoint of, the convergence of technology and financial services, which has really reworked the way that a customer experience works, and also the operational efficiency side of it. So financial institutions are really working towards that, being more nimble in that. Does it make sense to have, whoever you have in your back office manually inputting, form information or checking and verifying that a setup was done correctly, when you could likewise implement a technology that's able to automate that process for you, and then you refocus that worker on troubleshooting or error related to it, or figuring out, what a trend is related to, all of these loan applications that come in, or all of these payment channels that are running through their system, and now they see this analytics of, consumer behavior seems to be moving in this direction, so maybe I should bring this up as a suggestion. So I see that whole movement kind of happening. It's very slow, but you see the institutions trying to figure out the best way to be nimble. I've heard from a lot of financial institutions, they'll actually say that they feel like they're in an age where they're drinking out of a fire hose because there's so much information, so much innovation available to them, and they just don't even know where to get started. So they're having a challenge being able to even refocus because they have so much going on. So they're implementing all these technologies, banks and credit unions are full of projects. You know that well, Colby. So they're always going through this process of trying to figure out how to modernize themselves, how to implement things that their members or customers need. But they can't always take time to refocus and really do that long-term strategy piece of it. So they're going through that balancing act of, what do I need to do today and where do I need to be tomorrow? But some of those technology pieces really seem to be helping with that. And then the other thing that I'm seeing that's really interesting in the industry is a whole host of really unique partnerships. So for instance, you have things like the DCU Innovation Lab where they're partnering with technology providers, kind of refacing and shaping the future of fintech. But you also have these, cooperations of financial institutions working together. You have QSOs from a credit union standpoint, where they're all leveraging resources together and trying to figure out how to do that next incarnation of the industry. And I refer to that as next-gen banking model. So I think everybody's working to figure out these partnerships of how they need to evolve to be sustainable as they move forward in the industry.
So in the P2P space, one of the things that we're starting to look into is P2P for businesses. Obviously, consumers have a whole slew of options, Venmo, Cash App, we've talked about here. What are you seeing, if anything, in the P2P for business space? What are, if you're seeing anything, what are people trying to do? What are some of the challenges?
If you want, we can talk about it from an alias standpoint, because that's the direction I was going to go with it, with the whole idea of payments in general needing to move towards that idea that we don't need necessarily to have all the account information to facilitate a money movement or a payment transaction. If I know the alias associated with the transaction to get it to you, and you have, then vice versa, we can move that transaction together through alias, which is kind of a hot topic today, where we're trying to get the industry moving in that general direction. It's the tie between the alias and the directory service.
Is that for security reasons, so that the other side of the transaction doesn't have all of the account information?
That's part of it, but it's also for ease of transaction. So one of the things that makes P2P transactions work really well in a consumer standpoint is all I need to know is your email address or your cell phone number, and I can get a payment to you. It makes it a lot easier than me having to hunt down your account information. Right. And in a business transaction, if you could create a similar type of experience, you could create some ease of use there. So, for instance, if you're a small business in particular, and you come to do some work for me at my house, and I need to get the transaction to you, generally we would probably do things either through check, but a lot of the modern ones would be Cash App and Venmo. But if I could just go ahead and plug in, log into my online banking and pull up your alias, I just put in, whatever that indicator is, your cell phone number associated with the business or some address, and I put that in there and it gets it to you. Then you have the ease of the transaction. That also kind of ties into the QR code piece of it, where you could generate a QR code for me. But it's all about the ease of the payment.
I was just going to ask you about QR codes, and why do you think that? So that's obviously big in Europe and in Asia. Why has that not caught on here, you think?
It's a security concern piece of it. I think that's really the challenge. One of the things I think, though, from a QR standpoint is it's the ones that are stagnant. So like if you have a QR code that's the same all the time and I use that, I scan it, and that's how I make my payment to you. An immediate security concern there is, how do I know that somebody didn't actually compromise your QR code? Or, especially if it's digital. So if it's coming up on a digital screen, how do I know somebody didn't actually reroute me to another site? We all know, everybody's been educated to know that you can redirect people to other websites and it'll look like you're on the correct website. Yeah. So how do I not know that I've been redirected there? I think the ones that actually get created, though, so like, and I actually have experienced this here in Colorado. You go out to a restaurant and they generate a QR code for you to pay your bill, and you just do it all through a web interface at that point on your phone. That experience is a little bit more secure to me because it's a QR code that was created just in that moment. I saw it get created, and I know that I'm just going ahead and making the payment then and there. So that experience seems a little bit more secure. People actually even feel even more secure when it's on their own device. So if it's me that's generating a QR code to pay you and you use it that way, then it's in my control you scan it, and then you get your payment that way. So it's an interesting space because there's a lot of different options. But I would say that's probably one of the challenges with it. It's just the security piece of it. It's how can I really trust that I'm actually being routed to the correct place?
When we started this company, I had initially pushed back on doing P2P. Not necessarily member to member internal transfers, but the P2P paying somebody external to the bank or credit union, I felt wasn't a good use of our time strategically because there's so many good consumer options. I use Venmo, I'm a newer Cash App user. I know that Zelle is popular, but this is just a gut take. It just feels like it's a dying business running P2P through a legacy FI. Am I wrong?
So FIs are always trying to figure out a way to capture the relationship piece of it. So from that standpoint, when they're looking at the P2P solutions, they're really trying to figure out a way to offer an alternative. But the way I look at it, so you're right, there's all these, and I call them overlay services. So they're not really payment providers in of themselves. They're really just on top of it where the transactions themselves are still happening on the FI side. So, people love Cash App, they love Venmo, they love PayPal. From my own experiences, it really depends on who I'm paying, which one I use, because some people will say, well, I only use PayPal, or I have Cash App, or I have Venmo. I use all of them too. So it's because it's one of those things that it's really about my experience and what's convenient for me at that point. And when I look at it, I look at it from the financial industry that they need to look at it from that standpoint. So to your point, Colby, they're not going to recapture the entire Venmo or Cash App market. People enjoy those services, they like them, and they're free of the constraints of the financial industry to some degree. So it makes it easier for me. I can just always use them. But it doesn't mean that I won't use a financial institution alternative if it's available to me and if it's the best solution at hand. Like we talked about earlier, there are countless ways that you can move money in this country, because instead of having a legacy system disappear when a more modern one appears, some of the use cases move to the new system, and some of them stay with the old one. So it's a matter of kind of balancing it out and figuring out, what's the best solution, what's the best use of your resources. But financial institutions do need to realize that their P2P solutions, whatever they choose to do, whether it's something, through a service provider like yours, or it's through, a core service provider, which, we hear horror stories about some of those, but, it just depends on, how modern it is. But regardless, if they offer that, that's fine, but it's not going to replace the existing systems, the existing overlays that are out there, because it's really consumer experience driven. And really, to be a modern FI, they need to embrace them all. They need to say, yeah, we offer our own, but we also support you paying anybody any way you want to. And we make it possible for you to do that, because we're versatile. It's how they position themselves for that.
Yeah. Yeah, I see more opportunity on the business side. I mean, we've got vendors that, again, and we've talked about all the different methods of how you can move money somewhere. Wires are tough to do. They're expensive. A lot of institutions don't support just direct ACH payment. So I see P2P on the business side as sort of a more natural way to pay a person or an entity for services rendered. But hey, with that, Mark, I feel like I could talk to you for another 5 hours here. That was awesome. You're a wealth of knowledge. How do people get a hold of you? How do people learn more about WesPay?
Well, thank you, Colby. If anyone needs to reach me, you can reach me on LinkedIn. I am on Twitter. And then you can also use my contact information, which has been provided.